Hello. Just reading through the chat here. How are you guys? Um, hello, Spin, Roka, No Name, Bobby. How are you guys? I see. Yep, putting in the work. I'm glad to see that you guys are also putting in the work here. No Name, you are definitely my senior, that's for sure. Good teacher, I'd say. You know, funny enough, if you pat yourself too hard on the back there, you might throw out your shoulder, buddy. Bobby, yeah, well, I'm glad you're seeing things clearly. Mr. Spin is degenning it right now. All right. So we're going to get started in just a moment here and see if anybody else is going to show up. And also I want to allow you guys to catch up and see if the audio is sounding okay. So go ahead and let me know in the chat if audio is good. I might actually flip over to this and see if I can get audio for myself here. Yep. Sounds like audio is coming through pretty good. Hello, Baba. Needs more cowbell. Oh boy. All right, so we're gonna get started in just a moment here. Do a little bit of a Friday look at the markets here. Bitcoin, altcoins, if any look interesting, and some traditional markets as they are going to be closing here pretty soon, most likely after I take a look at Bitcoin. Music's a little louder than my voice. Well, we're going to turn that down anyway, so let's go ahead and just do that now to prepare. There we go, so we'll get that down a little bit. Roka, hello. Okay, so is that Roka or Raka? In American English, that's read as Roka, so. And the 47 just makes me think of Age of 47 from the Hitman games. All right, let's get the music under control here. Is it still too loud? Bobby degenning as well, I see. I'm surprised he didn't go 123x. While throwing a 123 EMA on your chart, along with that 369, yeah. Oh, I'm running behind on your chat here. Interesting. All right, so let me just take a sip of this coffee here. Is my voice? I've been trying to figure out the audio issue since Windows up, the latest Windows update. Is the no Asian crypto? Well, I am definitely younger than Mr. No Name. He may call me a kid, that's for sure. To him, I basically am. So the person, for those that may not know, Mr. No Name is actually my mentor. And he is definitely my senior. Audio all good. All right, so I'm gonna take the music down, and just one more of these. And then we're gonna take a look at Bitcoin here. Let's keep it. There's so few people that even pay attention to who I am here on YouTube and Twitter that no one's gonna know, no one's gonna care. Neither does Mr. No Name. So I am glad to see that he is watching the streams here, because there might be a few things that he can pick up from my analysis. So let's see. Let's get this over here. Make sure I can switch over. Let's bring that music down. Try to get the coughs out before I actually start this thing. How many of you guys want a camera view of Mr. Landy here coming up soon? You can stare at my ugly mug here pretty soon while I am doing technical analysis. All right, so let's get this rolling. Hello and welcome to Landy's Crypto Corner. Today is Friday. This is the 21st of July, 2023, and we are going to take a look at Bitcoin. We're also going to take a look at some altcoins and just the crypto market in general. And we'll probably jump over and take a look at the traditional market close when it comes in here in just a moment. So I see that prior to starting this particular stream, and getting to the chart here, I had mentioned that there might be a face reveal in the future, and it seems that that is wanted. All right, well, it might be a little bit, still shuffling things around, but yeah, probably. We'll see if it helps engagement. If my ugly mug is too much for folks, then I will just not do it. All right. Anyway, let's get into analysis here as I bump into my microphone. We're looking at Bitcoin here on the daily to start out with. If you did watch yesterday's Bitcoin in 60 seconds video, you'll note that I have talked about, well, a lot of what you are seeing happen on the charts. I had noted that we did hit that upside target from the video prior at the weekly support resistance area and the daily basis band around 30,300 to 400, rejected and came all the way back down and hit the downside, well, the first downside target from where it was trading prior to that video, and that's 29.5 at the lower second standard deviation. And Bitcoin is still just kind of struggling around the lows to get any kind of momentum in either direction in the lower term timeframes, and not much has changed. So I had noted in yesterday's, or the most recent Bitcoin in 60 seconds video, that this is the big area. It's the weekly resistance around the daily basis bands. Your 30,300, you can even give it to 500, but in many cases it's going to be 30,300 to 400, at least for where the basis band is starting to settle in. Most likely it's going to be under there by close today if Bitcoin does close underneath the lower first standard deviation. So what I would be looking for in this range, and I did note in yesterday's Bitcoin in 60 seconds video for today, is that if Bitcoin does start breaking down below the daily SR level here at 29.5, be aware of any swings of this low over here at 29.4 that hold on to the lower third standard deviation and then bounce back into range. and that's coming in at around that 29 to 29.2. It's probably going to update and slide down a little bit further, maybe even the upper $28,000 area. So, and if we do see it bounce back into range, you want to look for where it may reject and then start getting more aggressive expansion to the downside. If it doesn't just immediately dump out to the next daily support here at 28.5 to 6, give it a little bit of room there, and then possibly even down to the weekly here at 28K. Now, last stream, which was Wednesday now, I believe, I did take a look at the Stoke Momentum, and this is the KVDB Stoke. This is a paid Stoke, and I will show you the free one if you want to get a free Stoke that has pivots. This has a lot of extra bells and whistles. I use this one because I really do like the developers over at app.crowntrading.net, and I will support them. In this case, we can see that the daily Stoke is still headed down into the oversold zone. We have green DMI, and we have, declining ADX. In this case, it's not giving me much here, though. This multicolored line is just volatility. I don't really use Stoke volatility. I prefer even BBWP volatility. Another gentleman from the Crown Crypto Cave community there, the Caretaker, created this one. And this is telling us that, this is downside below, its expansion to the downside below that basis and lower first. And it is confirmed still. But it's not a particularly strong signal just yet. It is hovering around the 20% region. I'm sorry, it's around the 18%, so just under 20%. It is up over the moving average. Now, Caretaker did, allow me to use his code, and that would be the calculation for BBWP, and it is a part of the Landy Bands with Trend Checker. You can get that in the link in the description, and typically the first pinned comment of any of my videos, short form or long form. Now, this just comes packaged with just the BBWP box down here. And how you read this is, if it's green, that does mean that volatility is up over the moving average. It is a 5 period simple moving average. And in this case, that's how you can confirm that it is over the moving average, and typically giving you the bias that we are seeing or experiencing some sort of expansion, or it is still in an expansive phase in reference to the Bollinger Bands here. And if it is red, then it is the BBWP volatility metric is underneath the moving average, typically meaning that we are going to see some sort of a cool down in volatility, or we're starting to go sideways and experience a bit of contraction on the Bollinger Bands. So I do like the combination of having it on the chart for quick reference, but I do suggest if you're going to use a volatility metric, you go and get BBWP by Caretaker. It is free. It's in the indicator public library for TradingView. Now, Bitcoin is not doing much. The past few days, outside of the spike up to the 30,300 to 400 area, I'm not seeing much, strength in either direction here on the lows of the range. Bitcoin's still holding support. I don't really have a good bias, but just to give you the idea of where I'm looking, outside of that lower second, we already talked about the 28.5 to 6 downside and then 28K downside. If things, if there was a quick move and this support did not hold up, be aware of the next daily support area at 27.5 to 27.250, just below that 28K region. And be aware of bounces around that lower third. That's the big thing. If we do see the range start to break down, look for where bounces start to come in that may reclaim the wick low. Now, a little tip for you. Just reclaiming the wick low, you're going to get a lot of people long on that. It's not until we see, for instance, it would have to be from here currently a reclaim of this close right here at, what is this, 29,809, that would really start to give the bias that the bulls have reclaimed the range for real. So a move down to where the lower third is, 29 to 29.2, maybe slightly under in the upper 28K area, and then a move back in could potentially see just a bearish retest of these lows in this area. So it's not a given that it would just turn into a deviation of the range. But when looking at Stoke and where it is in terms of the chart here, it is nearly in the oversold zone. It is heavily pointed down, as close over close momentum is still, closes are getting lower. So that is what we're looking for in a regular Stoke. But I really want to call this out. We topped out in the oversold zone on momentum, on Stoke momentum here, when creating this range. We are still in this range. And on the other side of that, we are starting to see, while Bitcoin is holding the range, Stoke is getting down and almost fully reset, meaning, it's still got a ways to go, which would definitely give the bias for a breakdown continuation to those lower supports that I talked about. But if we don't see it break down and Stoke begins to turn, you see a low put in on the daily within the range, it's likely that things are going to go run the top side again. I mean, it's just, that's where we're starting to look at, getting back above the weekly here at 30,300, reclaiming the basis, wherever that ends up, and then testing the upper first standard deviation. And I've made a big deal about this in every single stream, but from the downside week half of the bands, coming back up and retesting the upper first standard deviation, in this case, would still be a bearish retest. And that's pretty typical on most time frames. It really depends on where the upper first is and what type of a trend it is. In this case, we're seeing a higher high, lower low within the range, so we're not getting much direction. But if we did see another lower high, then obviously bearish retest would be complete, and then you'd be looking for possible lower lows than this last low if things did move up from here. However, above the upper first, I would target the upper second and third area at around 31.1 to 31.2 to 31.5, which is around the highs. And that still does not get Bitcoin out of the range. So we would need to see closures in the strong half of the bands at, preferably above the upper first, outside of that bearish retest zone, above 30,800, to go and test these areas to the upside, get some closures in there, and then retest that 31.8 overhead resistance, possibly more at that 32.4. That rhymed, nice. But so far, nothing interesting is really happening. You can degen trade the lows here, but I'd be very careful. Everybody's getting chopped up to both sides. If you're really quick and you're keeping your eyes on the chart, you can get some decent scalps in, but just be careful. When the real move does get rolling, I do think it's going to be pretty swift. The 2-day is closing today, and we can see that the 2-day has come down, tested that basis, which is right around the daily support area here at 29.5. And we can see we're starting to get what I was talking about, I think Monday, or it was last week. I don't quite remember. But in this case, the lower first has now moved up to around 27,850, 860. And I suspect that it's going to end up in that weekly daily level between 28.5 to 6 area. So we can see the Bollinger Bands are quickly contracting. BBWP is 1.5%. It is underneath the SMA, or the moving average here. And we are starting to see that the 2-day is going to present itself with a setup. And the setup will begin on closures above or below the basis, of course, that start to turn or pull away from the basis. Will start to then show BBWP up over the moving average. I do suspect that we're probably not going to see this. We'll get the close today, and then we'll see the close over the weekend. And that's likely going to start painting the picture for us if something doesn't happen before then regarding the 2-day chart. So we've got today, the Friday candle close, and then we'll have the Sunday candle close with the weekly. So this is going to tell us very soon which direction it wants to go. And in this case, being above the basis and closing above the basis, if it does start to, if it stays above there in today's candle or this 2-day closing candle, and then we do see it, for instance, back above 30,400, you want to see it take out that last wick high, basically. And it's a little above 30,400. It's actually at 30,421 here on Coinbase. And I like the spot chart as it is. It gives me a little bit more directionality than some of these perp charts. That's why you see me use the spot chart a lot. And in this case, you can see that the 2-day closing closes here after closing below that weekly support, found it as resistance, and is continuing to find it as resistance. So a good gauge would be seeing the dailies close above that weekly resistance at around 30,300, and then look for a 2-day closure above those wicks at around 30,400 to 450. You can give it a little bit more room for confirmation if you want to be more cautious around 30,500. But I would be looking up to the upper first standard deviation around 31.4 to 5. And I do suspect this is going to flatten out, maybe even come down a little bit to where the upper second standard deviation is on the daily, around that 31.1 to 31.2 area. So just be aware of that after today's daily close. Take a look at the 2-day chart and take a look where the upper first is in relation to the basis and the lower first, as I do suspect that the lower first is going to be right in here in this support area at that 28 to 28.5 to 6. And then we'll begin to look for a nice compression, and then we can derive direction pretty easily from there on the 2-day chart. Once the 2-day gets rolling, it really does start to inform that daily, so on and so forth. But again, just keep in mind that daily momentum kind of resetting. If things don't break down, this daily momentum oscillator, the regular Stoke, so your close over close momentum, is probably going to start flattening out and then shifting, if things don't break down out of the range. And then that would be a full daily momentum reset within the range, while the 2-day then, is bouncing off of the ever important basis band here, while holding support. I also wouldn't rule out like straight up dump off wicks. One of the main reasons why I wouldn't rule that out, to the downside, is when looking at open interest here. We can go to, let's do the daily here real quick, just so that we can get some context. We have seen, actually, this isn't too bad. This isn't too bad. It's a little high, but it's not as bad as I thought. So we are kind of hovering around the OI, the same OI level that we were prior, anyway, around that $30,500 OI level. We're a little bit, we're kind of like right in line with it while trading at around 29.9. So one of the big things, though, when looking at open interest like this is being up in and around this area. We've seen, as OI has gone up, so has price. As OI has come down, so has price. But we are starting to see a little bit of a divergence, and it's a little bit clearer on some of the lower term timeframes, like the hourly. Now, there's a couple ways that you can interpret this. So on the moves down on the hourly, the move down on the hourly coincided with a move up in open interest, which, could be longs, but more than likely, this move down here is shorts coming into the market, hoping for that breakdown. That is the way that I'm reading this, and the reason why I am looking at it from that perspective is that one, this was easy to get short on, especially, the breakdown from 31K. So you likely have some swing short positions, including my own, a little bit above that 31K region, in and around the rejection at 30,400, 300, 400 or so. I was filling orders above there and then filling more orders there for a swing short position. But I've been aggressively taking profits within the range and just leaving a little bit left over for a breakdown. I would only size up again on a bearish retest. And in this case, I haven't seen enough to even size up on it. So, but this would be, to me, this looks like a range breakdown OI increase. It doesn't, because it has not broken down further, it kind of tells me that those are shorts. You saw on the move back up here that OI started to kind of come down, flatten out, and then even out, but it's still above the level that it was on the initial move down. So a little bit of caution for both sides. I mean, we just, prior to me streaming, we just saw a move up to 30,100 or so, and then it, immediately dumped off. Yeah, that was around $30,050 here when looking at the Coinalyze chart. And then it moved right back down, which is, in this case, because the move was to the upside. And then we see OI coming down on that candle down. It's kind of telling me that profit taking and then shorts coming out of, or I'm sorry, longs coming out of their position on this candle back down. So profit taking at the top here and on the way up at the top of this little consolidation range. To be quite honest, this does look like a bear flag on the hourly, but I'm not a pattern trader, so don't take my advice when looking at that. I can tell you all the patterns, but I'm not interested in pattern trading, as most patterns suck and have a very low hit rate. There are some patterns that do have a good hit rate. There's general guidelines for patterns, but in this case, there's not much to be made here. This does look bear flaggy to me, but in the context of the range, not really. It's a little bit too long for that hourly. Would have wanted to see it flag out here and then dump down to the support at 29.5. Bears had their opportunity, and it looks like, it's just a little bit more waiting. If they're actually going to see if they're actually going to come back down here, tag that daily lower second, and the support's down here at 29.4 to 5. All right, lower term time frames. Let's take a look at the 12-hour here. So you'll see that I'm using a little bit different chart. Got the Bitcoin in 60 seconds chart that's just got all the levels already there and very large text. And then we've got the regular chart here, where all I've got is the bottom side support resistance areas even. When looking at the 12-hour, you can see that it's trying to turn itself with and regain that lower first standard deviation, which is right at a daily closing level. And that was the lower close over here at 29,861. And it has been rebuffed yet again around the lower first standard deviation of the one-day chart. Again, this is going to be released pretty soon. I will be talking with JRTA hopefully soon, and we can sort through just a few things that I know he would like to gussy up and a few things that I would like to see in there, and then we'll integrate it into the Landy bands. But this is just a one-day representation. At least I think that's what it's set to right now. This is a one-day representation of the Bollinger Bands as levels. So that's this here. And then, of course, we have the 12-hour bands here. The 12-hour bands I have enabled on TradingView, the indicator price levels. That's why you're seeing the price level over here on the actual price bar. And then JRTA has been nice enough to include the price levels built into the indicator for the alternate time frames so that we can see both on the same chart at one time. And we can see that they're pretty much equal with each other. There's not anything too crazy. The lower first, obviously the 12 hours a little bit more expanded to the downside than the daily. And in this instance, the 12-hour isn't showing me much either. But of course, we can see that it is, again, just like the daily, this Stoke momentum overbought zone is the beginning of the range, right where Bitcoin is trading currently. And then we've got now a turn in and around the oversold zone, and now trying to pop its way up out of the oversold zone on the 12-hour here, which this is a full-on momentum reset within the range. Does that mean that it's going to go up? Well, not necessarily, but this would be caution for short positions, because if this does start to make headway, that does mean that we're getting close over close momentum, or close over close on the 12-hour is beginning to increase. So, could it cross back down? Absolutely. We could take a look at the pivot for that, in fact. And I'll move over to, for those of you, by the way, if you guys enjoy Crown's content, I do suggest that you go support them and his developers over there. Advanced Stoke is one of my favorites. Obviously, you can see I have the Jewel Premium here from a very long time ago and stuff like that. Big fan of the developers over there. But there is a free Stoke indicator with pivots that a member of the community, good friend of mine in the Discord as well, did find this reverse Stoke indicator, the BA reverse Stoke panel. If you search that in the TradingView indicators, you can get the Stoke pivot as well. This is a free indicator. Now, again, if you enjoy Crown stuff and like and use some of the other development, other tools on TradingView that those developers have developed, I do suggest you go support them. No, I do not get paid for this. I'm not an affiliate. I'm just a fan. All right. This is showing 29,700 as the momentum pivot. So back below there, which 29,700 is going to be the below the open here of these candles. So this most recent lower low on the 12-hour breaking below there, obviously going to turn that momentum pivot to the downside, or Stoke close over close momentum to the downside. So keep an eye on the 12-hour, because this is starting to present the real possibility that this could hold the range. It's not my first take, by the way. I will give you my non-technical analysis opinion, which is probably wrong, by the way, because it is just an opinion. I do feel like things need to go down and test lower. That doesn't mean that that's going to happen. I want to be very clear about that. In fact, I'm looking at this, trying to be patient as well. Even with all of the experience, guess what? You still have to manage your emotions, as trading is 99.9% psychology. So even though I do feel as though things should go down and test lower for liquidity, that does not mean it's going to happen. And in fact, the longer that this holds in this range on the 12-hour and daily, it's likely to pop up and try to test higher. And that's where I do think we'll see some very clear opportunities for scalps and maybe even swing positions. There is, let's flip through the time frames here. The 5-day is not inspiring confidence, by the way, but it's not bad. But basis starting to curl over is not what I want to see. As someone that would want to get into a long position, I'm not currently in any swing long. I am spot long, and I'm swing short. So I want to be very clear. It doesn't mean you follow my lead when it comes to trading. Follow your own trading plan and risk management. But the weekly is still fine. Basis pointed up. Below the upper first standard deviation, however, would give me the bias that we'll go down and test the weekly. That's currently at 28,150. We talked about this the other day. And we'll have the weekly close, and then the 5-day will close shortly after on Monday. So we have the 3-day that just opened as well. The 3-day basis is looking very nice here, actually. Nice pointed up. And of course, it's right in that support zone. So we'll flip over to the chart that actually has all the support zones. It's actually above the support zone. So this is where you might see wicks down into, the upper $28,000 region that bounce and reclaim the wick low. That's where you then look for a close open structure low to actually be closed above or reclaimed by the bulls. And I'm not getting too much else from the 3-day. I mean, from a Bollinger Band perspective, you want to see closing below the upper first. You want to see the basis band rise to price action, or for price action to head down and tap on the basis band. And then, for further upside, of course, you want to see a bounce off of it. Not too much crazy going on here. Looks fine as it stands right now, as does the 2-day currently, but just be aware that we will see a volatility increase if it does pull away from the basis towards the upper first, or get below the basis and start traveling down towards the lower first. And just because you're seeing a volatility increase, this is still mean reversion, even down to the lower first here, because it is around a support, and reclaim some of this candle here. I'm not seeing too much else. There was somebody had mentioned, hey, isn't there more supports on this area over here? And I mean, the close opens for the daily and 2-day are going to be right around that 28.5 to 6 area. You can take the wicks if you want, right? That's if you want to play the wick side of things, you're still looking around, in this case, 29,200, right? That's basically where the daily lower third standard deviation is coming in. From the daily perspective, there's no real major closures above there, because I'm taking and let's go over to this chart. We'll go to the daily. This is a good question. Like, why have I picked out these specific areas? Well, because I'm looking for where a reversal has happened, right? So in this case, on the daily, we had a daily reversal consolidation setup at around that $28,000. But then we had the real low over here that spiked into this order block candle on the daily that then reversed. So this was a full reversal right here with the close above the open and wick high of the bear candle, and then also taking out this order block candle, comes back down and retests in and around this area, and then reverses to the upside on this candle here on the 10th, for the daily. But that's not the local area that I'm looking at. I'm looking at, 3 candle structures typically or more that then put in a reversal for that time frame. So in this case, we had 5 candles on the low here. This guy here set the low, big old doji, took everybody out. FOMC, I believe, was going on around then. And then we had it was not a confirmed reversal because of that doji, but it did go and test further, and then reversed, in a one big candle, and then we got another attempted reversal of this consolidation structure. When you get stuff like that where it's knocking up against a clear area of resistance, I'm going to mark it, right? And same goes for the downside supports. Why don't I have the lows marked off? Well, this particular chart I don't. And the main reason why I don't have the lows marked off on this chart over here is because, well, we do have some lows here, that 27.5 to 27.250, but that's because we have a low and a high structure inside of consolidation. Why aren't I taking this 27.150 or 27K area? Because this was a consolidation, in my opinion. It was not a clear reversal to try higher. It stayed within the range. Yes, this one also stayed within the range, but there's clear, well-defined takeoff points. Can that be an area of interest? Absolutely. There's an order block here. But the main reason that I mark off the highs typically is because if you're above it, we're coming down towards those highs. That's, especially your most recent highs. That's going to be your base for horizontal support and resistance areas, because you are coming down towards that high structure, and you have to get through the high structure to then even go test the low side structures. And in most cases, I like to mark off the weeklies and monthlies first on the highs and lows as your support resistance areas, and then I'll work my way down on the dailies and begin refining that. That's why you see that I might not have some of the same areas that you do. And there's no, there's general guidelines for marking horizontal support and resistance, but there's no like, there is books, but there's no, it is a personal preference thing. One of the things that I will tell you from my experience is that on the way up, you want to mark the clearest overhead resistance that are lows, and then you take the lows first and then any highs within that area for that time frame. So you take it in order, lows, then highs, because you're headed up. When you're headed down, do your highs, and then you mark your lows. I hope that answers that question. But yeah, not too much else. Break below the lows, 27 or 29.5 rather, then I'd be looking for 28.5 to 6 if there's a clear break. To 28K, if that doesn't hold up, looking in the mid $27,000 to low $27,000 region. To the upside, above 30,300 to 400, it is interesting. Price action up to around 30,800. You could even take 31K depending on the time frame. When you go low enough time frame, I believe 31K is going to be, in and around 31K, 30,800 to this spike high here at $31,000. So that would be like my 4-hour area if I was using a lower term time frame. So you can take that all as a bearish retest zone, kind of from the lower term time frame. From the daily, it'd be 30,800 closes above. Bears beware. We're probably going to see things head a little bit further up to that upper second. So when looking at, let's take a look at total market cap and see what that's looking like here. On the daily, the structure looks fine. The argument can be made there's bearish divergences in here and it's got to go down, but it doesn't really mean much when you're coming off of a downtrend like this. Could it test lower into about 1.12 trillion? Sure. 127. Yeah, absolutely it could. In fact, it could come all the way down to the lower second, swing its range lows, and then bounce. That most likely sees Bitcoin headed down to the 28 to 28.56 support. Headed up, it's still above the basis. If it does get above $1.180 trillion up here at the upper first, then I would look for things to take off to 1.200 trillion. Not much to be made of that other than back above the upper first here, 11784, and that would fulfill that criteria. So there would be a Stoke turn above the upper first standard deviation, and this is just setting up for a range right now. Not seeing anything too crazy there. We can take a look at total 2, get rid of Bitcoin. Again, it actually looks pretty strong. Could there be a wider correction here in play? Yeah, but it's above the basis, 571 billion. It's got about 2 to 3 billion more, and it's above the upper first standard deviation and probably testing in and around that upper second at around 600 to 605 billion. If it does break down below the basis, then we're looking at that lower first at about 550 to 555 billion. Total 3, actually above the upper first, looks a little bit stronger. So your shitcoins are doing much better than the majors at this particular moment in terms of their trend, but they're in a pretty important area and they need to start closing above this little consolidation zone from the way down and possibly go on a little bit of a run. So that's going to be around or above 358 to 360 billion. Back below, this area here would be below the basis, so below 342. I'd be looking for this to run down to, probably wash out another 20 billion down to the lower first at 330 billion. So that would be about a $30 billion drawdown in in the actual shit coins. So, what is this being led by? Well, you can just look back here to Thursday and you can see that a lot of that is being led by XRP. So XRP actually is doing much of what I had spoken about, but it did head up a little bit more on the day that I was talking about it on Wednesday, and it has reversed from there and headed down to the upper first standard deviation. Nothing too crazy here. This actually looks pretty strong. The area that I would be aware of is 67 cents, in and around that low, losing the upper first. But for the moment, it looks okay. Waiting for BBWP to come down. We want to see a consolidation, and then we can derive direction on the next expansion. If you didn't get in on this move, there will definitely be opportunities in both directions, I believe, pretty soon here. And I'm sure because it is such a big range, I'm sure that it's actually been pretty fun to scalp in both directions. Yeah, this has got to enter cooldown, but just because it's entering cooldown on the daily, look at the weekly. The weekly's just getting started. So this would give me the bias that this is going to head up a little bit more and test higher over time. Of course, again, this is a weekly, so that's kind of going to give me the bias that it's likely to hold on these highs for a little bit longer. And it's, daily pullbacks from the way the weekly currently is presenting itself here. We'll see what it looks like here soon, but you can see the basis of the daily, which is far more volatile, right? So the 1 day, did want to double check, is far more volatile than the weekly just now, but it is at the upper first, which would maintain structure on the weekly. So even around 60 cents, this thing still is in breakout territory and still looks good. The next one that's been running pretty hard is Link. And Link, some of you may remember when I talked about this consolidation and watch for a deviation when it was breaking down. Watch for a deviation. That's what the bulls want. And it was a deviation. Now, I talked about this quite a long time ago at this point about that deviation when it was still chopping around in the range. I said, beware of a deviation of the lows. This tells me that this thing is probably, on the weekly, it's looking for a pullback, and probably the daily even, it's looking for a pullback. Yeah. I don't even think it's ready yet, though. No, it's not ready just yet. Probably need to see a 3-candle high, like a confirmed high put in on Link for it to actually start to get that pullback on the daily. And it's above that area that I had spoken about that it needed to get through to get a nice breakout to the upside and test the top side of the consolidation range after that deviation of the lows. And it's doing pretty much exactly what we had spoken about. Now you just want to see any kind of retraces basically hold around preferably 750 down to 730, and that's going to be the in and around the upper first standard deviation of the daily here. And at worst, you want to see it holding this area here at around 690 to $7. You don't want it to give up this nice little higher low consolidation takeoff. You also want to see it above the daily basis band. And then I think this has got some further upside. When looking at the daily, it's got some more to go, and it can run this local high here at around 860 to, what's the next area? 880, maybe even $9. We could still see that if it's closing candles above the upper second standard deviation. I suspect that because the daily's not run out its momentum yet, and it's getting volatility uptick still on the daily. Yep. 2-day is well over the moving average here, 70 over 46. Nice expansion. 2-day is going to close today. As long as it closes above 773, 2-day is going to expand again, then likely bringing those targets into play in the mid to upper $8 region. Again, it did spike right around there, right around the mid $8 region, but I would suspect another move to that area you know, maybe after some lower term time frame pullbacks. And then it's really got to start recovering that $8, the upper half of $8 to $9, to then go and start testing the breakout area at around 9 to 950. And I believe this one is going to be 963 up here. So it's got potential. Do I think that it's absolutely ready to really make a move to the upside, like significant, to like 12, maybe $13? You know, it's still in and around this low side structure over here in the mid $8 region. Just above it, there's close opens at around 10. If it starts to regain 10, I could see it spiking up to around 12, maybe even $13. And that's all going to be predicated on this thing staying above around $6.90 to $7 on the daily to keep this momentum to the upside going. And below there, you know, it's just back into the range, probably mid $6 region and under, down to you know, low $6, high $5 region. And but the weekly looks good, quite frankly. The momentum pivot's 522, so it's got plenty of room on the weekly. Of course, that is going to update on Sunday, but looks good. Looks good so far. Just again, watch that $6.90 to $7 area on any pullbacks. I had somebody request Doge. Doge, you know, Doge kind of did itself a disservice in this range, this consolidation range with that beautiful spike up and then rejection, fall right back into range. You know, it's nothing is really interesting on Doge for me until I see, you know, closures back above 14 cents. Now, of course, that's a 100% move from where it's trading right now, right? So that's kind of, you know, me poo-pooing it a little bit. But yeah, I mean, that's a 100% move. And that's a big move, but that's for like a bigger run. I'm not really interested until it starts closing above that area. You could take the 11-cent area as well as a good bias to go retest that, but you could take this weekly low and kind of give yourself a zone between the weekly high and the weekly low here. Let's make that yellow. Again, messing that up. And as long as it's above, you know, I would say 5-6 cents, it's looking fine to me. You can even take 5.75 on a weekly close. Looks pretty good, and I would give it down to the wick as well for some more volatile moves to the downside. But realistically, it's in a pretty big consolidation range where, you know, it's looking from the weekly perspective like it wants to cool down and then try for upside. And that's kind of what Stoke is telling me at above 6 cents. And BBWP is telling me, though, that it's not quite ready for any kind of a significant move outside of the range, in my opinion, to either direction, unless we start seeing it break the lows. But I would even I would hedge a little bit that could become a deviation, because the weekly had the move down. So this was expansion to the downside, and now it's mean reverted back to the basis band. And even if it got re-expansion above the moving average, it would take at least a week, maybe two, depending on the level of expansion. You know, if it's shot through and it gets above the last expansive move at around 30%, then I would say, yeah, it's probably breaking down. To the upside, even then, going to tap it on like the upper first and second above the basis, it's got to get closes up there and then start turning that moving average up over with the volatility metric. So I think this has got some time on the low side of this wider structure is what I'm trying to say. Hope that helps from the weekly perspective. From the daily perspective, you know, it's riding that that basis to upper second area and rejecting off the upper third. Not bearish, but when you take this in the context of this is a little bit more bear flaggy if you're going to do patterns, and this would tell me that the target would be the actual lows. But momentum kind of flip-flopping around here. 712, where is 712 on the bull bands? That's going to be losing the upper first, basically, back below the upper first, and I would be a little concerned that this might come and violate this last low, and the last low is coming in at around 6.84 or 684, so that's 6.8 to 7 cents. I would watch it on any kind of a move back down on the daily. Closes below there would start to be that would be a structure break, and then that would also be a bearish reclaim of this high on a closing basis. So I would just be aware of that. Basically below the basis band at around 7 cents to 6.8. This is going to update, so I would even give it 7 cents. As long as it's above that last wick low, though, it should be okay. And the wick low is coming in at 671, so 6.71 cents. I don't really have a strong opinion. It looks like it wants to consolidate some more. Weekly looks okay, but it's not giving me anything. If the market moves up generally, Bitcoin starts moving, ETH starts moving, Doge is probably going to move. And that's where you're probably going to see some more volatile moves, closes above the upper second. It is getting confirmed expansion to the upside still, as long as it's staying above the upper first. And if it gets a close above the upper second, it might even turn the momentum oscillator Stochastic close over close and then come back to it later. Could see, this consolidation break, and then it legs up a little bit to the upper 7 cent region to 8 cents, low 8 cent region. So basically 7.8 to 8.25 or so around this daily consolidation. And then I'd check on it. There's also that low right there, by the way, in the low 8 cent region on the daily over here. So that's the next area I would be looking. And if it just shoots through there, then you're looking at that 9 to 9.5 cent region, which is in and around this high here. Hope that helps, sir. Let's go ahead and take a look at chat here on YouTube. I've gotten a lot of questions from you guys over there at the shop. Anybody want me to look at anything specific? So I'm seeing HBAR, Doge BTC. I can always check on Doge BTC. Let's go look at HBAR for Roca here. I do know that HBAR has been consolidating for quite a while, and it has had a nice move up to this low side structure over here, but it is rejecting off of it. First pass rejection, absolutely 100% normal. So that is expansion into that area. And this is a do not pass go scenario, I guess. There's kind of a zone here as well. We've got this area of resistance just above it that also has a low side structure and then a failed high on the way down. This is going to be interesting to watch. I don't know what's going on with HBAR. I know that there's a few guys that really like HBAR on crypto Twitter. I believe, is it Credible? I think Credible is a big HBAR guy. I don't know though. But HBAR is, it's in a very long form consolidation. Let's look at the weekly. This is basically what we saw back here in 2020. Went just sideways for a very long period of time before the run. Did your M for market maker, and then it's just kind of back to where it was. Now, you could also, by the way, somebody had mentioned, oh, no, it's not M for market maker. It's M for wasn't that magical? was like, really? That's okay. I like that. That's good. Pushing past the lower first standard deviation, rather, getting to the basis and then pushing the upper first around weekly resistance looks like it. If Bitcoin does not break the range to the downside, I would actually, favor a move up on alts in general across the board, maybe not versus their Bitcoin pairing. Of course, I'm going to go look at the Doge BTC chart in just a moment for you, Bobby. Excuse me, taking a sip of coffee here. But 64 cents is within striking distance. Not much happening on HBAR until it gets above the last weekly of this particular downtrend to get a nice trend break. I'll be honest with you, I'd almost want to see this trend break a lower high and kind of come back down and hang on to the lows if it were me and I was the market maker for this particular coin. That's what I would want to see, is get a little bit of a lower high, come back down here, test the lows, scare everybody, and then take out that high, get a structure break, come just short of this high, and then put in a higher low, and then take off to test the actual highs of this consolidation. But for right now, I mean, this is a mean reversion back to the basis, so this is still a bearish setup to come back down and actually tag that lower second at 40 cents. But Stoke does not agree with me because we are seeing close over close momentum get higher on the weekly. At 44 cents is the pivot currently. It's trading 11 cents above that at 55 cents. So I would venture to say that this may have a move up if it can close the weekly above the basis at 56 cents. If it can close above this basis at 56 cents, I would say keep an eye on the weekly upper first standard deviation at around, I would say 60 to 63 cents. There is an order block in here as well, so just be aware of there's multiple order blocks on the weekly, but the most recent one is the one that is most important in my opinion, and that would be this weekly order block before the drop down, and that's coming in at a open of 60 cents and a close of 63.5 cents. So that is also going to be right in the zone above the basis. If it does start to work its way through this overhead resistance on the daily, that's where I would be looking. And then to the downside, anything that closes, back below the 50-cent region, which is the basis band on the daily, and that's the open of this week's candle, I'd be looking to the lower first on the weekly at around 48 cents, and then watch that little bit of a higher low structure down there at 47 cents, because if it drops that, what you really want to see is it swing the lows down here at the lower second in the low 40-cent region, and then pop back up and try to actually get an impulsive move or something to the upside. But for right now, it looks good. It looks as though it wants to march a little bit further, but I'm still cautious, mainly because Bitcoin's riding the lows. If Bitcoin starts to really bounce aggressively within the range, you're probably going to see most of these alts move up, and some of them much more significantly than others. From a structural point of view, BBWP over the moving average, initial rejections around the resistance, riding that upper second standard deviation, holding the upper first at around 50 to 53 cents would look really good for further upside to me. Start to lose that 50 to 53 cents, and then, I would, that's the basis to the upper first, basically. Start to lose that area, then I would be, I'd be cautious, just because that last low is around there. And this was a nice little downtrend reversal, bounce off the lower second standard deviation area after, trying to reverse the structure. You had this long drawn out downtrend, move back up, find support, reversal. You want to see it complete above that overhead resistance where it really got rolling with that downtrend. That would give me the bias that things are going to trade significantly higher, relatively speaking. I still think it's going to stay within the consolidation range. I took a look at Link, Stinky Linky. I looked at that one. I think that was the second one I looked at. I looked at XRP, Link, Doge, and now HBAR. You want to see? I see XLM. Hello, Pro Beast. I'll take a look at that. Oh, I thought Roca asked for HBAR, but Pro Beast asked for HBAR. I hope that helps. Let's take a look at Doge BTC. If you roll back a little bit, Baba, I did look at Link. I can look at XLM. I don't know. Do you have a preferred exchange? Like Binance, you want perpetual, you want spot? I prefer to chart spot, even if you're trading perpetual. I just look at it on the exchange, but that's me personally. Do one for me quick. Render. Oh, God. Binance chart for render. Let's look at XLM real quick. We'll just pull up the perp chart here. This is probably coming into a local high here. Femex. Well, Femex isn't. We should actually use a Binance chart. Femex is a good chart, but the history is going to be short, and you're going to see when I go to look at volume, it's going to be all over the map because they have lower liquidity. But yes, I do like Femex. I actually trade on Femex myself because they have low liquidity. But that's a story for a different day. Anyway, I see somebody said, hi, Don. Wait a minute. Baba? Oh, Don. Hey, Don. I wasn't sure which Don. I see Don's in here. Awesome. All right, cool. Let's see. I would actually take the Binance chart over the Femex chart, but when you are trading, use your Femex chart. In this case, this looks like like it wants to put in a local high here soon, but it's still strong currently above 12 cents. You did say XLM, right? Okay. It's above the consolidation resistance. This is a legit breakout. I even found support on it. So above that consolidation around 12.6 cents looks pretty good. As long as it stays above this last low, it's looking pretty good for further upside. Even down to the basis band on the daily at 12 cents, it looks good. Oh, hey, if for those of you guys in chat here, go ahead and hit the like button for me. It does help out, seeing as we do have a bit of a full house of regulars here today. But yeah, above the upper first is where you want to see this to maintain its volatility to the upside, and that's about 14 cents, 14.29, so 14.3 cents right now. This will update. I suspect it's going to update to around where this particular candle is coming in on the low today. It might even end up in like the low 15-cent region at the upper first to maintain this aggressive upside posture. That's what I would want to see. We do see that BBWP is hitting extremes here along with the moving average. So, and it has been hanging on the extremes here. So it's not necessarily a death sentence, but if you do see closures below the upper first, you want to see that basis band to lower first hold at worst. And the reason why you want to see the lower first hold at worst is because that is currently above or right around this last little consolidation double bottom low on the daily. It's a little tiny double bottom. Pretty sweet, actually. Nice volatility expansion to the upside. Hits the basis, fakes everybody out to the downside, double bottoms its way out, moons, gets that expansion, holds on to the upper first. So now you want to see it ride that upper first to basis band. If it did hit that basis band, it's likely, and put on a low there, would likely get bullish divergence. But you want to see the lower first standard deviation is 9.6 cents. So 9.6 to 10 cents is the area that it absolutely has to hold for this to remain, viable for further upside in the near term. I do think it's ready for a pullback on the daily. It could still continue to get residual expansion and run the high up here at around 19 cents. Maybe even this high here at between 18 and 19. But until you see a closure above there, again on the daily, I wouldn't be looking for much more. When looking at the weekly, it is rejecting off of this low, I believe. That's going to be, yep. So a reclaim of 17.3 cents is what you want to see. And then I would take, yeah, kind of a zone. I mean, again, I like my zones of support and resistance. You can see the breakdown candle from the wick low, closed below this, and that led to this reaccumulation zone. It is testing the highs again. It's getting expansion on the weekly. We'll look at that in just a moment. But we've got two zones to the upside should it break and close above this low. I would say you've actually got a couple. I'll take 3 of these, please. Thank you. So you got a 3-piece up top for resistance above the current resistance. And this is a fairly significant bit of resistance here because this was a redistribution structure. So reclaiming it would give me the bias that it's going to go test around 22 to 25 cents or so up here at this overhead resistance here. You need to see it hold upper first right now on the weekly. That would be an encouraging sign that it's going to keep testing this low on the daily. This little bit of a high right here, or close open high of the downtrend. But it's trying to reverse its way out, so I wouldn't be surprised if there was another higher low. This is a nice little double bottom. You could even call it a triple bottom structure. This is more of a double bottom on the weekly. And then test up. Volatility is extremely high right now, and it's above the moving average by a significant margin. But I do suspect if XLM closes above the upper second, you're going to see BBWP max out at about 100. And then it's probably going to keep grinding this resistance from the weekly perspective with short-term time frame pullbacks down to that 12 to 14 cent region. And if it does start to break down below the 12 to 10 cent region, then eyes on it could run the lows again around that, I'd say 6 to 9 cents because you're getting expansion around the lower second, which would actually be a new lower low. So you don't want to see that. But you could always see a reversal deviation, kind of like what Link did, and then come back up. But above the basis on the weekly, getting expansion looks good. I would just keep an eye on that 16 to 17.3 cents. That's where I would be focused on. See closures above there, especially on a weekly. It's likely to run the wick highs locally again. Closures in this area then would give me the bias to test around 20 to 25 cents. Hope that helps. Let's see. Let's look at Doggy. Oh my God, is there a real reason why you wanted me to look at this? Just to make fun of it? It's trying to reverse. It's lower lows. It's finding resistance at the previous low. If it does recover it, it could go to 316 Satoshis or so. Around the upper first to the upper second at 318, upper third maybe even at 345 to 350. It's trying to turn its way up. It does have momentum divergence on the way down. So it's trying, but this is mean reversion, and it's bearish mean reversion until proven otherwise. It needs to break 300 Satoshis, and then it gets interesting. So above 300 Satoshis, Doge is interesting. Below there, I'm not interested. Me personally, I don't think it's very interesting until it gets above there. And then it can start to reclaim this entire area. And it needs to maintain closures above 200 Satoshis. So the lower second standard deviation of the Bollinger Bands on the weekly. Daily probably looks good. Expansion to the upside. Again, same area, 299 to 300 Satoshis. It is currently rejecting off this daily low structure. If it can break above there at about 257 to 260 Satoshis, then I would be looking for it to test higher around this consolidation range high at 277 to 280 Satoshis. That's this little breakdown consolidation high area, and then come back to it later. All right. Render was the other one. Let's look at render. RNDR, USDT, Binance. It's consolidating after a nice breakout to the upside here. It's trying to hold on to the lows of this wider consolidation. This was a nice move up. I mean, this looks like a consolidation after a nice breakout. Now, the overhead resistance is going to be the big thing here. It's just such short history even. But this, excuse me, stomach is growling. As if you could hear that. Maybe you could, I don't know. Weekly, it needs to hold on to the basis band, or else this is going to come down to about $1.46 to $1.50. I wouldn't want to see this consolidation breakdown, but I mean, this thing has room to run to the downside. It's got room to run to the upside. So because this was above the basis band, tapping on the upper second standard deviation area, this is mean reversion, right? So it's mean reverted back to the basis. It can even go down to the lower first here at 146, and it's not a big problem. It's in cool down phase right now, so this isn't like ready to, I don't think it's ready to range break and go on a massive run to reclaim its chart listing here. But I would say big zone, 91 to 120. It's a big zone. It is a shit coin. So I would venture to say that that's going to be your line in the sand when referencing the daily, and or anything under the weekly. That's going to be my line in the sand for this at about $1.20 to 91 cents. You don't want to see that nice reaccumulation, breakout, retest, lost. Above there, above the upper first at 233 again on the weekly, this is going to start looking like it wants to go test, the deeper $2 region, around 277 to $3 at that overhead resistance. Now, of course, it did reclaim this low side structure at around that 226. That would be a reclaim of it again at above the upper first. So I would be looking for it to run the deeper $2 to $3 area. If it loses the basis, you can say hello to about $1.46 to $1.50. And I would say the same for the daily here, because that would be, this is riding its way down. So it's got to hold $1.80 on the daily, or else it's going to be testing these lows down here about $1.60. And if it loses those, that's where we start walking this down to the weeklies. Maybe a run or a swing of this area on the daily would be swinging these lows down to that $1.40, $1.50, $1.46 to $1.50 area, and then come back to it. You're looking locally for $1.70. I mean, that's the lower second standard deviation. You start getting below there, you're going to see expansion to the downside. We already have below the basis band, already seeing expansion. So any closures below there would just further that expansion. But that doesn't mean that it can't just bounce at about that lower third standard deviation. The lower third standard deviation is at the 172. My bad. Lower second would see expansion into that area. You could even get a swing of that area, and if it reverses, then probably get a good play back to the upside. But it looks pretty good. It's a nice little run. Still pointed down on Stoke, $1.96. Turn that back up. That's probably going to come down to that's the momentum pivot's below the basis right now. Or no, it's like right at the basis band. So if you do start to see the daily close above the basis band, likely going to get your reversal on Stoke, and then keep an eye on the upper second at around $2, $2.05. Let's see. I can look at ETH. I can look at Quant. I've got a little bit of time today. I'm just looking back through chat to see Roca. I see he was talking likely about market cap. I would listen to him as well. He knows his stuff. Just about everybody here knows their stuff. So if there's anybody here that's newer and wants to link up with some of these guys, you can. I think most of them are on Twitter as well. I think I know who Baba is. He also he's not in Discord, but he is on Twitter and knows his shit. He's a good dude too. Let's see. Was there any other ones here? ETH, Quant, really the only other ones I see here. I could take a look at ETH. Just watch my streams, buddy. I have a whole history here on YouTube that goes far beyond what is publicly posted, but I will also have educational videos out as soon as I hit a few more milestones, trying to get to 500 at least here on YouTube. And then educational videos will start to come out, specifically some basics, some intro stuff for people who need to understand trend, support and resistance, volatility, and how that determines momentum. I'm a volatility trader myself, so that's why I have this fancy set of bands. Let's go ahead and that I've built, and then I have, some people in the community have also helped me build these bands. They got a lot of fun options in them, so I do suggest you check them out and let me know. I'm going to look at Coinbase chart. Now, I have not looked at ETH in a while, but it has played pretty nicely with whatever support and resistance lines I had here. Currently bouncing even off of 1878. This is stronger looking than Bitcoin currently, as on the daily it's in and around its basis band. It is not quite as compressed. This is set up for a range. What I will say is there's quite a bit of bearish divergence building here. I could tell you that without even looking at the chart RSI here, but yes, there is bearish divergence there. No, I'm a liar. I'm gonna turn in my trader card, my trading card. No, there is bearish divergence here, quite a bit, in fact. No, I'm a liar again. See, nope. Try to redeem myself, made myself a liar again. No, this is actually not bad. Look at me talking out of my butt. 1936 is the Stoke pivot. So back above the basis, it would have the opportunity to test the upper first. That's where you want to see closures come in, around 1942. But realistically, it's above yesterday's high at this point at 1930. So 1930 would put it just shy of this 1936 number, at least today. But that's going to keep marching down, especially on this green candle, bouncing at support. I suspect this is a weekly support that I put here, or it's just a random daily support. I have no idea what I was doing with this particular chart prior. It has been quite a while. Above the basis on the weekly, needs to test the upper first. That's your 1950 area. Above there, I'd be looking for this thing to run or mount an assault back at $2,000. And below its current consolidation area at around 1870 to 1865 or so. It's actually 1850 down here. You know, ETH, you're not being very clear. 1830 above the lower second standard deviation on the weekly. It's just a consolidation. Looks fine. Back above the last high at around 1955. Things look good. Needs to regain this high here to this zone here. So I'm going to make some zones. And that is going to be your 19 to your 19,000 or $1,900 zone around the basis, perfectly bracketing it. Recover above there. I would look for this to run around the 1940 to 50 region and try for that 1955 weekly high area, as there is no real significant lows outside of the ones that are already marked around the $1,900 area. So, I mean, this thing could realistically come back all the way to 1830 to 1840, and it's not doing much, except, you know, getting a much longer form consolidation. And as long as it didn't break down, looks fine. From the daily perspective, from the weekly perspective, we're getting a pinch on the Bollinger Bands on a move up. Had the weekly close higher high, have higher low structure. In theory, for the trend to continue, of course, it's got to get above 21,125 or so, which would be above the upper second standard deviation. So if we do see things back around the $2,000 region, eyes on around $2,050. That's where I'd be most interested. That's above the upper second standard deviation. Really low volatility on BBWP, and I would be looking for this thing to take a leg up, actually. And I mean, realistically, we're probably going to see Bitcoin do the same. I mean, this is stupidly low volatility, so you do want to see this start getting above the upper first and second on the weekly to start giving you that bias that things are going to test higher and possibly significantly higher. Because if it does start increasing volatility to the downside, it needs to reverse off of, like, it would have to be the lower first, in my opinion, to lower second. It could get all the way down to 1650, but that's a big drawdown. That means Bitcoin's probably breaking down into the possibly even like mid $20,000 region, like 26, 27. You don't want to see it past that last low. It's got nice structure right now, a little bit of accumulation here, and then get above that upper second. I would say that to kick the party off, that'd be around $2,000. Let's see. I would pay for any education class from you, brother. You know, education should be free. I mean, in my opinion, when it comes to this stuff, I'm not giving you anything special that you can't find yourself. But I have a lot of experience that I can impart upon you and to you in these markets, not just crypto, but traditional markets as well. And then, you know, it's it's eventually there will be probably some kind of a paid thing to support the community, whether it's uh, a risk management framework built into an indicator or something like that. That would probably but all the basic stuff's going to be free. Education, indicator, more advanced stuff like a risk management framework probably have to be a paid product because that would be probably built within the community and guys need to get paid. And then, um, you know, to actually grow a community, you need to make a little bit of scratch to support it in that way so that it can run on its own. But, I'm not in this teaching to specifically make money teaching. If I get big enough, YouTube will pay me as well. So, and then it's all good, but I do appreciate the sentiment. Yeah. If anybody else has any other ones, I'll look at like maybe one or two more. I saw ETH. Quant, I don't really know if I've seen anything on Quant recently, except a drawdown the last time that I looked. There's quite a drawdown. Do I have it saved? I do not have it saved, apparently. I thought I did. Yeah. This was in, yeah, it's still in the same drawdown on the daily from the last time I was looking at it. So let's look at the weekly. Had a nice move up off the low. Nice little head and shoulders. Probably hit target too, by the way. Inverted head and shoulders even. And then it's just kind of rejected and come back and is consolidating sideways. There's not much to be made out of this. I mean, back above, 104, 105 region, it's going to start to look good on the daily to go test around 110 to 112 at the basis on the weekly. Closures above the lower first at 102, 103 area on the weekly could give the potential to set a low on the weekly, but realistically, I would want to see closures above the open of late July's weekly candle, as this is a lower high, and that's coming in at 110. So we're looking at back above the basis on the daily here at 103 would be above the lower first on the weekly, to then go and try and work its way up to test around 110 to the basis at 112. So that would be my upside. If it drops the open of this week, it's going to be a rundown to like 90 to 93 bucks at the lower second here, maybe more. This is in a consolidation though. I mean, this thing's good all the way until like 92, 93 bucks at the lower second. Below there, it's lights out, man. This thing's going to go down and test its actual lows. But for right now, it looks fine to at least attempt a lower term time frame reversal. The daily already bouncing off the lower second back here and regain the lower first, rejecting the basis first pass around this high side structure. As long as it can close, if it can close back above 103, again, the basis, this is going to be 103.39, 103.40. I would look for it to test into 105. Above 106, this looks good to go test 109, 110. And again, back below 100, it's probably going to test its lows around the lower second at 97, 98 bucks at the lower second. So you can see how the Bollinger Bands are lining up with support and resistance areas pretty cleanly here. Below the lower second, that's where you're going to get that weekly area breakdown. That's probably going to send things down to the $90 to $93 lower second standard deviation on the weekly. So just be aware of that. You don't want to see closures back below 100 bucks. You want to see this thing starting to push through. Oh, just to support. I appreciate it, guys. Look, I mean, there will be ways to support me in the future. I have to grow the social media presence in the first place. If you just want to support me, there's going to be stuff like, when the account size of YouTube hits 500, I can offer subscriptions. Um, uh, and when there's a big enough audience on Twitter, there's subscriptions there as well for people who really want some extra content. But then I gotta figure out, I don't want to lock anything behind a paywall, so maybe it would just be individual help or something like that here and there. But then there has to be structure to that, because that can also eat up a lot of time that would take away from general analysis and course building. So it's more than likely things are going to remain free, and that stuff's going to be optional if you want to help out and support and build the community, that kind of stuff. Um, I'll have to come up with something for that. Maybe even take suggestions from you guys. I do appreciate it, though. I appreciate the sentiment. Um, but yeah, I mean, I'm a trader, dude. Like, I trade. That's how I make my money. Um, and I'm doing okay. So let's go ahead and take a look at traditional markets. They have been closed for a little while now. Dow closed on the weekly. I'm going to look at weeklies. No need to look at dailies. I want to see the weeklies. We can always look at the daily based on the Bollinger Bands here. So the daily is overextended on Dow here. It did close above the upper. No way. Well, this is going to. Did it really close above the upper third? No, that's not correct. That's weird. Let me flip back to the weekly. 34,930. Something's not being read right there. That's a bug. So let's actually go look at the daily then. There's something, maybe it's because of its log. I don't know. That doesn't look right to me. But from the weekly perspective, did this just... So 35,522. Daily closed at 35,227. That's why we're getting the different reads here. Interesting. So anyway, Dow is at the upper second standard deviation. This is a typical reversal continuation area. We've already seen a bit of continuation. So coming back to the upper first rather, at around 34,800, even down to the basis here at 34,331 is just fine to remain in trend. But this is expanding, so you do want to see for the trend to continue to the upside, closures above the upper first standard deviation that just kind of wick off the basis if it does break below it. And I would be looking for things to generally head up, especially the way that the weekly closed here above its upper second standard deviation, right up on it, closing slightly above at 35,214. It closed at 35,227 on the weekly. I would be looking for the next big area, and that is 35,500 or so to at least get tagged and then come back to it. Maybe even make a zone out of that, 35,500 to the wicks at 35,631 in this case. I could definitely see expansion of the upper second standard deviation on the weekly hitting that area. And what is also going on here is pretty interesting. That makes me think that if the weekly is going to continue like this is expansion from a very low level, by the way, guys. The last time that we saw Dow expand from the lows like this was back in October of September to October of 2021, and then we had that November move up. So just to give you an idea of what that was, and I'm talking move up in volatility, that was the highs all the way back to the current lows. So this was your downside expansion. So when I say move up, I'm not talking about price in this case. I'm talking about volatility moving up. And that was the expansive move down. Well, now we're on the other side of that, and we're seeing the possible etchings of expansion back to the upside. We are already going to see this tick up in the next open on Monday for Dow above that upper second standard deviation, which, the highs are within striking distance now. And I've mentioned this before. Looking at the upper second standard deviation on the monthly, it is around the high. So I could see a deviation of the highs and then back down, but it's all about where does it hold support. And if it holds above the upper first to even the basis, man, even the lower first, that would be taking out this last low. You wouldn't necessarily want to see that, but this looks like it wants to run its highs from the weekly perspective. From the monthly perspective, it is showing me that it had its mean reversion and it wants to try, its mean reversion back to these highs over here. And then it wants to test its local high structure on the monthly again as well around that 36,650 area. And that's any closures above there at 36.9 to 37 thou. This thing's going to run hard. So just keep that in mind. NASDAQ didn't quite make it to its upper second. Still got room on the monthly to the upside. The weekly starting to curl down. That is the other thing on the weekly. They're all, getting hot to trot to the upside here, but expansion on Dow to the upside might see a little bit of a pause in, unless it just rejects and comes down, because the look of the weekly on NASDAQ does look like it wants to put in a local high at the very least, but it's also on a very nice run. So, I mean, this is where I would just pull out a fib. Let's get stuff cleaned up a little bit here. This is where this last low we could take. The 618's lining up perfectly with the basis band at least currently on the weekly at 13,922 on NASDAQ. So pullbacks there perfectly fine. Lines up with the 618 of this current move. Now the basis will be above there, but the basis to lower first is the area to keep an eye on. The lower first is currently above the last consolidation structure, and that is likely to move up to the 50% at 13,300. And if this hangs out on the highs, it's likely to end up around where the 618 currently is. So we are seeing a volatility. This is highly volatile right now, but it can just kind of do one of these where it kind of, especially if we do see this get continuation next week. What am I looking for? What do I want to do? Brush. We'll do, could do this and keep volatility high. So just keep that in mind. This is likely going to get a little bit of a cool down, but it's still heavy expansion to the upside. That 20 is going to be chasing for a bit here. When taking the full structure into account, 618 basis lining up perfectly. That 50% is cutting right across that consolidation to breakout area of this move. The 618 is coming in above this last high. 50% area is this low. So this is all lining up perfectly. And this does give it a little bit more room. And at the 50%, 13,186. So if it does pull back, those are the areas that you want to see hold. 13,186 to 13,834 to 882 around the basis. So that's kind of where I'm looking at the perspective that I have on that. The daily's just floating on the top side, strong half of the Bollinger Bands lately. It is mean reverting back to the basis here. You want to see it hold that support. And 14,900 is the area that you want to see it hold lower first. That's the legit breakout area. That's what you want to see hold. and then you want to see this move back up. But yeah, it's ready for mean reversion coming in the next week. It's already in that posture. We see that reflected in BBWP as well. It's not confirmed though, so this could just bounce off the basis and continue to get expansion to the upside. That would actually be pretty cool. And we see confirmed expansion continuation on SPY. So this is getting into the areas that I've talked about, where it's in and around this last set of highs, that gap area that I talked about. It regained that gap at 452 to 458 area. Regained it, pinned it out, and getting its pullback. It's still above the upper first, looks fine. All the way back to the basis to fill this gap would be fine, 443. As long as it's staying above the wick low here at the lower first standard deviation at 436, this is probably going to continue to run the upside. Volatility is indicating that it is still expanding to the upside. Stoke has gotten its turn down, but it's within the context of mean reversion. So it could come all the way back to the basis at 443 and still be incredibly bullish to the upside. On the daily, the weekly, pinning out that upper second standard deviation. It's going to keep chasing it up. Expansion 57 over 48 is probably going to expand quite a bit more significantly in the next open. So we'll look at that on Monday. But yeah, its target is the highs. It did not close above this last closing structure. First pass rejection there. Absolutely normal. It's right at the lows of the highs of the all-time high structure. So obviously this is a big important area. First pass rejections are to be expected. Complete reversals can happen, but that's not my first look. My first thoughts when looking at this. Above the upper first at 440 basically, it's fine, even all the way down to 420. Nice. 420.37. Come on, update. Just a couple more. Get the meme numbers in there. Looks good, man. What do you think, for those of you in chat, what do you think the macro analyst's narrative is going to be if we break out to new all-time highs? Double top, right? That's going to be instinct, is just double top. But what if it pushes the monthly up and starts getting expansion far beyond that area? It is no longer in double top territory. I wonder what their narrative's going to be. Not sustainable, all this other stuff. I mean, look, silent bailouts are going to prop the markets. That's just how it works. So that's what we have going on in the United States and abroad is not direct bailouts. In some places they are direct bailouts, but it's a silent bailout of the banks and a transition over to a new monetary system for central bank digital currencies. So you can float the markets while the real economy's hurting like hell, and then you arrive with your gussied up Fed now. And your Fed coins and CBDCs in various countries. And look, here's some incentives, and we can just start moving liquidity over. So markets are actually a lot less irrational than people think. They're fairly rational. It's people that are irrational. I disagree with the markets are irrational. There's always a rationality to it, and it's liquidity flows. It's the people trying to read the markets that become irrational because in many cases we carry our biases into our look at the markets. And this happens even in financial firms or prop shops. So, you know, there's guys here listening in this live stream right now that are in a prop shop. And I know them, and they know what I'm talking about. They know that even they can become irrational when evaluating things. That's why you have to have a risk management framework. That's why you have to look at both sides. That's why you have to ignore the noise. You have to ignore the noise. You have to ignore those macro analysts because they're not traders. Most people that give you their opinion on markets, whether it's crypto or traditional markets or macro analysis, most of them are not traders. That's why when you go and you look at guys like Crown, you look at guys like Michael Pizzino, you look at guys like Jason Pizzino. Jason's a little bit more of like I like the narratives because he likes to play the narratives and trade them. But you've got a lot of guys from the actual market maker space. You know, these guys that have you've got Fiboswani. These guys are actually making markets, or have made markets in many cases, and they understand that you can't be subject to the narrative regardless of your bias. Your bias might be up, it might be down, it might be doom and gloom, it might be, you know, everything's rosy and peachy keen and it's gonna, you know, this is the new bull run to new all-time highs and Fed's gonna print and continue to print, M2 money supply is gonna grow, they're gonna pivot, yada 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 yada, right? But then none of that matters in your day-to-day trading. And especially when you're operating within a well-defined risk management framework, you can't be worried about what the new narrative is or what so-and-so said on CNBC or what, you know, your favorite personality on Twitter said, because who cares? In many cases, they're not traders. And if they really were traders, look, people who show you P&L over and over and over again, just a tip for those of you that might be new, anybody that's showing you P&L and you don't know them, their personality on Twitter, 99% of them, I'll never show you my P&L. Maybe once in a while, I'll share like a hit trade with some friends, but never publicly. But people who are showing you P&L, in many cases, are using testnet accounts or they're using garbage accounts. If they have any kind of a big following and they're doing that kind of stuff and they're showing you formations, and a lot of the formation trader guys like to do that. A lot of the candlestick gurus, what is it? The bar pattern gurus, like, well, it's this bar pattern was the downside bar pattern, so it's obviously the next big move is going to be this right here. So Bitcoin is going to go down and test 24.8. And they could be right, but that doesn't mean they traded it, right? That's you know, that's not technical analysis. That's not trading. You can't trade that far out. If you're trading higher term time frames, you're trading monthlies, and no one gives a shit about that. If you're trading higher term time frames, you traded this already on the way up. You've taken a ton of profit, and you're letting the rest ride and hoping that it comes back down a little bit more, so that you could trade it, you know, further up. And you're waiting for, you know, pivots. You're waiting for this was the mean reversion back to the basis band on the monthly. So now you're waiting for expansion, and expansion is really only going to start occurring on closures above, you know, the upper first standard deviation here at 37,700, which is your close open at 37.5 or so of the breakdown candle, but still needs to get above 38, you know, 5, and then that's a breakout to go and test higher. That's where expansion is going to really get rolling, is between the basis and the upper first, and then the upper first to the upper second is where it gets really rocking and rolling. Need to be aware of reversals around there. And to the downside, expansion is really only going to resume to the downside on closures below 19,500. So the last wick low of this monthly. Other than that, the rest is just noise. And you've already been in position, and if you're in a larger position, you're probably in options. So all the day-to-day BS, no one cares about. Rant end. What is a depth? What is a depth chart? You mean like an order book chart? Order books? Or you have to explain what you mean. Because even I'm like, what is a depth chart? There's order book charts. There's and that when I think of depth, when I see or hear the word depth, you're talking about order book depth in most cases. Um, but that's a different subject matter. And yes, you can trade order books, but you still, I mean, order books are more for positioning, right? I need to see where the liquidity is coming in. I need to see where things are reversing off of specific areas, but you don't really need it. Yeah, that's your order book depth. So yeah, that's order books. That's looking for what's in order. And look, that's just your limit orders um, when you're looking at order book depth. And so like when you're looking at what um, is it Teal Street? Teal Street. Let's go to Teal Street because this is just we're gonna look over here. I'm not gonna log in. At least I hope it doesn't log me in. Nope. Oh, I thought you could just go look at it. There you go. So this is your order book depth. Um, how deep are the orders on one side versus the other? Asks versus bids. So asks are your your sells, and bids are your buys. So price moves down and hits the bids, or gets the offer gets lifted, meaning we're asking this, so we lift your offer, meaning we'll buy your coins on this side. And then you've got your depth chart. So this is shifting around dynamically, where it's showing you kind of it's building up a lot of asks on the other side. So if the bulls lift the offer, meaning they buy that ask, then price will rise. And if the asks start hitting the bid, meaning there's a lot of bids down here, then the asks will hit the bid and push price down. There's a million different ways to explain it, but it's just really what is the depth of the order. So 250 thou on one side versus 172 on the other. So likely there's more pressure, so more supply in this area than demand at this particular price of 29,893.6, right? Versus they're willing to buy 29,891.1, right? So that's just your order book stuff. So it's your bids and your asks, and then the depth of those orders. And look, people can place limits on their really big limit orders and then just pull them before they get hit. So typically, what you're looking for in volume is like, let's go to the 5-minute. You can just use your regular chart. You don't need to worry about that. The only time that you're going to be worried about order book depth is if you have a very large account where you are trying to position yourself to get your orders filled with the least amount of slippage. And unless you're trading with, more than, I would say you're going to start to get slippage on certain exchanges above around $100,000 to $250,000 if they're smaller. But on the bigger exchanges, even those orders go through pretty much without issue. You start really ripping through the book once you're over $500,000 to $1 million orders. And typically, you want to ladder yourself in, or you want to TWAP yourself in if you're a really big player, so that you can, limit the amount of slippage that you are paying, because that's a part of your cost basically, is the slippage, because you're basically paying either above or below, depending on your position, the trading price. There's very minimal slippage on places like Binance until you start really ripping into their books with market orders or something. But Oh, what was I going to do? I was going to show you that you could just go to the wrong chart and then try to show you something. Big thing is, like, if you really want to learn something, learn volume and volume profiles. And there's a few guys in the community that once I get a public Discord up and running are really good at it. Almost everybody in my friend group community, which is not a public Discord, it's just me and some friends. It's not like anything crazy. It's not a private paid thing. It's just me and some buddies, and we'll have to open an actual public Discord here. But looking at volume and understanding volume. So like this candle up at the highs, very high volume, spiked it again in and around this this high. Let's just look left. There was a high here after getting past those lows. We saw another spike of higher volume here, and then a move down. Volume spiked on the low after the low was set. If that low holds, that high volume low holds on the next rundown, which it did, another bit of high volume, that low holds, and price is going to probably float to the upside, right? Because that low was spiked, that low spiked on high volume, and if it doesn't get closed below, then it's likely going to head back up for liquidity. Same goes for this high up here. It didn't get closed above. So you had this little spike high. I did get closed above just slightly and then reversed, but it didn't close above this high over here. So you kind of have a zone you got to work your way up through. But it spiked into that zone, high volume zone, around that 30,034 to 30,054. Did not pass it, started to reverse. 3-candle reversal was confirmed on this candle right here at 1150. It's a 5-minute chart. That was your candle reversal structure. It was more than 3 candles, so it was 4 candles to get below this last low, and then dump out high volume. 3 candles, never actually completed till back here, but it did get a bit of a 3-candle low structure, retest, comes back down and doesn't pass this last low, which was the highest volume low. The price is going to float up. So learning the interaction between volume and price gives you an insight into what's happening in the books. So, they tapped all the liquidity in this area here, for the asks. So the asks pushed it down, bids overwhelmed them. So there's more bids than asks. And then they tried again. Asks come down, bids and hit the bids. The bids were strong there, and it moves back up. So that's how your order book depth is. You don't need to beg. It's going to be public. Follow me on Twitter. That's going to be the easiest way for me to get information out to you. So the question was, hey, I want to get into this Discord when the time comes, when you open it, basically. It's going to be open. You'll just have to go through a bot and make sure you're a real person and everything's verified and stuff like that, and you'll be able to get in and hang out. I don't have it built yet, though, so it's just got to give me some time. This is all very new. This whole channel, this YouTube being public, this was just a private stream with me and my friends for many years, and then just recently took the YouTube public and starting to grow that, and then wasn't really posting on Twitter, and now I am. So Twitter's Twitter link is in the description, I believe. It will also be in the first pinned comment of every single Bitcoin in 60 seconds, every single live stream, every single video I upload. Let me see if I can grab my Twitter profile for you, and I'll post it in the chat for those of you that don't have it. And you can come hang out with me on Twitter. There's also a community there. It's Landy's Crypto Corner on Twitter. And that's pretty much going to do it. Anybody want to hear anything else from me before I head out? I made it. I made it to what? Oh, he said you made it. 469. All right, nice. I think you guys are more excited about that than I am. Oh, that's funny. So, no schedule just yet. I will probably have a schedule pretty soon when my son goes back to school. Then I will put a schedule up. Yeah, no worries, guys. Anything else before I go, guys? Interested in anything? Want to pick my brain for just another minute here? You gotta. I use that a lot. Welcome to my TED Talk when I tell people to buy Bitcoin. Get on my stump. Do my stump speech for Bitcoin. Just me in the middle of the street ranting about CBDCs. Yeah. But yeah, now's your time to get in there, and if you got any pressing questions that you'd like to ask about TA, go ahead and enter them in the chat, and I will do my best to answer them quickly here while I still have time. Any life tips for a 23-year-old? Don't waste your money on shit coins. Unless you already are collecting a bag spot, hold them through the bull market, through the bear market here into the bull run, and then let them go, and do not piss your money away on stupid shit. Wait for rates to come down. Work up a down payment, buy a house. When interest rates come down, here. 30-year mortgage rates are what you're going to want to watch as a 23-year-old. You're going to want to watch, where's my 30-year? That is not the 30-year. That's M2 money supply. Nice little low it's setting in. That's the Federal Reserve rate. Where's my mortgage rates? That is... Oh, it could be the thing that says mortgage right there. Jeez. Come on, Landy. What the hell are you doing? You're going to want, as a 23-year-old, my life tip for you would be work hard, learn trading, don't waste your money by pissing it away on high leverage, low, high risk, low reward coins. If you're going to buy shit coins, buy your shit coins spot and wait for them to rise and let them go at logical places. Always take profit. Don't overdo leverage. You took a like away. Somebody unliked this. Holy shit. Thanks. As I said, don't use high leverage. Somebody unliked the video. Ecomi. But as a younger person, got any thoughts on... Jesus Christ, what is that? I have no idea what that is. How do you spot tops and bottoms and confirm them? Just simple naked chart. Yeah, I'll give you that one in just a second. As a 23-year-old, you want to watch mortgage rates. When they start to crash and come back down towards the basis 5.71, 5.80 and under, over the next I would say 9 months to 24 months, you'll want to see how this plays out. I'm looking for a lower high on 30-year fixed mortgage rates, and then head down. Monthly is still headed up though, so this is a fresh turn on the monthly, which does mean that it's likely going to hang on its highs and maybe even try higher to 7.25. Again, what were we at? Yeah, it's probably 7.25 to around as high as 8%. But I do think that it's going to keel over. It's looking a little tired on the weekly. So it's the weekly versus monthly right now, and you want to see that weekly start to turn and head down and get below the 6.78 upper first standard deviation, which it is currently right at as of the weekly close, or coming into the weekly close, and it's basically going to stay there until the weekly close. But What I will tell you is you're going to want to just keep an eye on that. Don't piss your money away. High leverage trading happens to a lot of younger guys. You might be on a hot streak. If you're on a hot streak, make sure you take profits and don't overdo it. I was a very good trader even when I was much younger, and I got burned with poor risk management. So that's what you want. All right. So how do you spot tops and bottoms? We can use a naked chart for that. Let's use Bitcoin as an example. Let's go to the 15-minute chart. Let's turn off all the different fun stuff. And I'll give you a quick tip on this. 3-candle reversal structures are what you're going to want to look for in relation to support and resistance. So if it's just a naked chart, you're probably going to want to keep volume on there. But you want to see 3-candle structures typically, or you want to see a high put in. So the high back here was put in. Basically, you have this structure here. The high wasn't put in even on this candle here. The high wasn't put in until the open of this candle was taken out on a close. And then we start to see price pull away. So the high was put in on this candle right here on the 15-minute at 4:15 a.m., I believe, for me. That's when this high was put in. We have the reversal structure. It retests and tries to push back up, and then it puts in another 3-candle high structure, or a high structure right here after trying to retest that open at 30,283. So you can just see the way that price interacts with the open and close here. So this high was in, and then we have trying to push back above, and it's failing. So whenever this close open here gets taken out, we have another high put in, and we've got a downtrend higher. We've got a lower high. So that is basically your trend beginning for the downtrend, and easy short position on the retest of this structure. So had high put in when this was closed below, got another high put in when this is closed below, comes back and retests it, and then we get another high when this is closed below. So we've got now a full trend to the downside, and what happens after that? It loses its base. I mean, the next big area that it was going to have to hold on to is this high structure over here, which it was already losing. And then this order block right here from the way up to this high over here. And it just absolutely destroyed this high and took it all the way and ran it all the way to the low over here. Tried to bounce, found this low as resistance, and then, hung out on the actual lows here. So this area down here then kind of tried to reverse, but because this candle open was all the way up here, there's no real structure. The structure has to be built locally, so it's going to head down further unless it just goes and reclaims the open of this candle. So that this is not going to be a sustainable low unless it just moons and or builds higher low structure on the way up. It did not. Had lower low structure, but it did not pass this low just yet. And when you look left, I mean, there was the actual low over here at around of this bigger range, I would have marked off on a naked chart. And if it didn't make it there, then you start to look for this structure to develop. This is all a downtrending structure, and it's not until this candle here on the close that breaks this wick high of this little low side structure here that we can start looking for higher lows. and we did get a higher low here, but it failed to actually get past this structure here to the left, and it's now range bound. So it got range bound, it's now downtrend again, and then reversal structure. So you do need to have, support and resistance. The reason why I'm marking it for you guys is because I would just look left at the structures, but because you are following along, I'm pointing it out, and then, kind of marking the important areas to be aware of. But you've got the major areas here that, there's some wicks down here, and then there's the actual zone down here, which is going to be kind of where it kind of came into this liquid zone on these two candles and then bounced off of it. And then I'd be looking left and using that as my guide for the way back up. And right now, I mean, 3-candle reversal here was pretty much set. You're going to get indicators calling this 3-candle reversal set over here on the third candle, because the third candle, actually, no. The open was 29,984. The close was 29,985. So it was actually this little dumpy candle that was the confirmation, and then it just bounced right back up. There's no real structure here, though. This is a lower low than this last low, and we've got higher highs up into resistance, and then a lower low on divergence, pushing it back up. So we don't really have a clear structure. This is just a consolidation right now. And you can draw patterns on this. You can, this is your bear flag. It's a little too long to be a bear flag now, so it's just a consolidation. But it's really just a matter of understanding trends when highs and lows are put in. What's the criteria for a high or a low? You want to look for 3-candle structure, typically on most highs and lows, and then then kind of go from there. Look, like I was just so you know, I just looked over and I saw talking about high leverage over there in chat. One of the big things that you got to understand is like you could take $1,000 account on 3x leverage and you can make a lot of freaking money. I was doing for a little while. I was showing guys in my friend group that it's very easy to make a couple $100 a day or a week, depending on your time that you have in front of the computer, in front of the chart, to trade on 3x leverage with $1,000. It gives you $3,000 to trade with. Like, if you can't make a couple $100 in a week, then you're not using risk management techniques effectively. You need to rethink your positioning, and then just go back and create, checks and balances for yourself. Create a checklist. Like, I want to see this, this, and this before I actually enter my trade. Then you have more confidence in your trade, you have more confidence in your stop loss, you have more confidence in your take profits. And the other thing is people letting trades just ride all the way up and then all the way back to them in longs, and all the way down and all the way back up in shorts, because they're looking for the big trade. You're not going to get the big trade, man. Like, in most cases, you're going to get, you have to build up your trading account, and you do that by quick profit. You get into a position and you take your profit, you close your trade, and you hunt the next trade. And because you want consistency, you want to gain experience consistently trading, and you need to have an account that is still funded to do so. And most people most people are getting, for instance, in Bitcoin's range right now, most traders are getting chopped the hell out of this range. And, you are seeing open interest kind of all over the place, and it's rising on the lows here. Why? Because guys are all out of position. They're getting all mixed up. They're getting wicked out to the top and bottom side around the low side structure because they're trying to long and short it, and then they keep re-entering on the other side and getting, quite honestly, getting their asses handed to them. So realistically, you want to look for easy trades that meet your criteria for, it's holding on to, it's getting contraction to expansion is my favorite trade of all time. Contraction to expansion of the Bollinger Bands gives you a ton of high quality trades. And I believe in my way of trading so much so that I will take trades based off of where they are on the bands and what the volatility metric is looking like. For instance, I'll go to the hourly because you got to work your way from the higher term time frame. It all has to fit into the higher term time frame when you're trading and positioning on the lower term time frames. But we saw compression back here on the hourly after the big move down. We saw compression, and then we saw expansion from one side, and lower second standard deviations, if they don't break any kind of a structure, are typically going to end up being reversals. Not always, but typically end up being reversals. We saw expansion to the downside, and of course it holds this low structure after wicking into it on this candle here. So usually lower second and third is going to be one of two things. It's either a reversal zone or it's a continuation zone. It did not break the structure and get continuation to the downside, which the next target would have been the wick low anyway. But so I took the reversal off this, and it's a quick move up. But the quick move up on the reversal in the lower term time frames, I'm using the 1 hour in that case to position myself on the lower term time frame. So when the 15-minute set a low there, on this guy, we'll call it. It was around this candle, but on the 15-minute, you can see where that structure began to be built. That was the low right at the beginning of that candle. So it was actually the next candle after. It was the low for me personally. Many would take this as this 3 candle structure here. This is the low, go March, but it got above the lower first standard deviation. Next candle confirms the low, and because of where it was reversing off of the hourly, get a nice scalp up. Yeah, it didn't, it meets the criteria. It went sideways for a couple candles and then started to push up, but I have confidence in what I'm seeing. Came back down, held support here on the low side structures here, and this high back here after spiking the consolidation, lower second standard deviation, pushed up, and now we have a reversal on the other side. Of course, I would have resistance, overhead resistance is marked. This was the daily basis band at that point, was at 30,500 or so, I believe, at that point. So yeah, so I mean, this is not, if you are not experienced in trading it and or already had a position, for instance, a swing position, this is not the area to take a swing position unless you see a low being set. Then you can take a swing to 30,500, to 800 bearish retest zone on the daily, but that's a swing position, right? And you're not going to get that swing position really confirmed until it's back above the basis at around, and that wick high from yesterday at around 30,300 to 400. And then that's a daily swing, right? You could get maybe positioned on lower term time frames, but if you're looking at like the longer term, it's still danger below that wick low and that basis, right? There's a weekly resistance right there at $30,331. There's the 30,800 upper first. And it's still no guarantee that this thing's going to do much. It could go up and reverse off the upper second and third. But of course, on lower term time frames, that's a big trade. So, and you don't always have to hunt for the next thing. You can just trade one thing. And there's enough movement in most cryptos for you to, for you to actually get good trades in on lower leverage that don't get you into degen territory, because degen territory is just going to lose you money over time. It kills your win rate. So, and look, degen is the name of the game when it comes to crypto Twitter, but look at how many people are just gone from crypto Twitter. They're just not there anymore. They got washed out of markets. And then they try to keep their high profile status by faking results, to be quite honest. Many of them do. Like many of the well-known personalities just straight up fake their results. And then you've got the people who just constantly one direction, without any nuance. And you know, I've always referenced Capo as being, he was directional to the upside at the highs and directional to the downside at the lows. It's like, dude, you have to have nuance, and you have none, and that tells me that you're not actually trading. You could tell who's trading, who's not. You have Profit Blue, another one. Dude's not actually trading, and god awful technical analysis as well. But he does know how to do it. But there's no way he's trading. There's no way that dude, if that dude's significantly short right now, he would have taken that short a long time ago and been talking about it before then, right? Like, you would have taken your 31.8K short, and dude, probably if he was short, he got washed out. There's no way he's actually trading this stuff. And if he is, it's probably with very low dollar amounts. Like, you can really pick out the real traders. Don't follow a lot of them. There's good ones. There's good people that have bigger accounts. If they give you their invalidations, then you know that they're real ones. If they give you invalidations. I like Credible Crypto. I think he's great. I don't necessarily see eye to eye with his current take on things, until I see specific things change on the more macro timeframes, like the monthly, like I explained earlier. Like above the upper second standard deviation, of course, that would be above the monthly $48,000 high rejection. Then yes, I'm looking for things to run the highs and possibly higher this year. But that's my specific criteria. And the thing that I really like about him is he's very clear about what his invalidation points are. So I think that's, be careful, because like crypto Twitter, crypto YouTube, it's full of degen con artists, in my opinion. There's some real guys out there. I like the Pizzino brothers, Crown. There's probably a few others that I'm not thinking of off the top of my head. Those are the ones that I regularly keep track of. Although I haven't even been able to really keep track of much. Just jump in and say, a few things here and there for Crown in his live streams here lately. I think he might have one coming up again soon too. Is it Fridays? Is he doing Friday live streams? You guys will have to let me know in there. But like, he'll gladly tell you that, I don't know. It's my thoughts. Like, because dude actually trades, and he trades at lower term time frames. So he's probably trading that hourly 4-hour combo. Whatever criteria is being met in the 4-hour versus the hourly for those setups. I know that he's doing the quant program, and he's probably trading off of all of that. I mean, he tests all of his stuff very thoroughly, and he's an analytical guy when it comes to that. So he's looking at the statistics, as you should, especially coming from the background that he has. So when you're working with a risk management framework, you are working with the statistics. A lot of times there's a stats guy as well, by the way, but you need to know your shit, and you need to build your own stuff within the risk management framework when you're working in any kind of a trading firm environment. You're not just left to your own devices, unless, there are some places, but it's you want to go and you want to find people who actually trade, learn from them, and protect your account. There's always going to be money to be made on both sides. Just don't get in the way of yourself. China stock index. We'll look at that, and then I'm gonna get out of here. So let me. Okay. So you want the 852, right? But you want this? Yeah, this is the right one. Well, you probably think that China would need to do something about this, huh? This is freaking ugly. I mean, we're looking at a larger consolidation off of the lows. I got to go to a monthly for this. Okay. This is a consolidation after a nice move off the lows and a retest of those lows. So as long as it's above the lower first at 62.40, it's fine. I suspect, the monthly's turning though, and this could lead to a volatility increase, but this doesn't look like it just yet. It could come all the way down to the lower second standard deviation at 57.64 on the monthly at these lows. As long as it doesn't lose that area, it's fine, and probably bounces back up to that basis at around 6,700 to 6,720, maybe even around this highs. That's 69.11. Nice. What is the actual high there? 7,100 basically. That's kind of the range it's going to play in, I think, for now. What is the weekly looking like though? The weekly looks like crap. But it is in an area where it may reverse around that 61.31 to 61.300, where that lower second is. Yeah, it might get another like drive down and then try to pivot off that lower second area around these lows. So it might get a little expansion down. If it starts beating these lows out to the bottom side, and especially this last lower low, it's going to be a retest of that low, and then it's probably going to hang out in the range down in the below 5,000, to be quite honest. Like, I could see it dumping out through that 5,000 range, mainly because of the expansion look being 0.0. It's freaking low, man. Like, so it's ready to move. It's not there yet, but it's ready to move. Probably check on it next week or the week after, and it's probably going to be initiating said move or going back into a consolidation towards the basis band at 66.80. And if you do start seeing it back above 68.50, then this is probably going to start that expansion to the upside and be pretty strong. Hey, Kem. I'm probably going to be wrapping this up here pretty soon. A lot of talking with you guys in the chat today. But the early part of the stream is just straight up through and through analysis. Bitcoin, XRP, Litecoin. No, I didn't do Litecoin this time. Link, XLM, others, Doge. I think Doge is in there. Two charts for Doge, rather, because Doge BTC as well, and then a few others. And then just general trading stuff here, answering some questions for you guys this Friday. Yeah, this looks dicey, man. This looks dicey because it's like right on the edge when it's coming to this weekly. But if it can hang on to the lows, it can avoid a dump through 6K. If it can hang on to that 5K region. And then back above the basis at 66.80, go check on it, see if it's pushing that upper first around 68.50. And my personal thoughts on it is it looks like shit. Like the entire index looks like shit. But excuse my language, it does. This is awful. This is a downtrend on the monthly for their index, for this particular index. Is it likely to try to reverse? I would say that it's probably more likely from a structural position that it does try to reverse. Also, there's a giant order block on the monthly here. So they probably want to hold on to that. So, and if it's lost, very quickly regain it. Because otherwise, well, it's not going to look good. And my suspicion is they will prop it up if they have to. So, Keynesian economics are just as applicable over there as they are here in the private Western central banking system. That is going to do it for me today. Sorry, I kind of ran out of gas there at the end. But I will see you guys on Monday. I will be back. I will, of course, have Bitcoin in 60 seconds videos, unless something comes up. I will have Bitcoin in 60 seconds videos later today, and then, of course, over the weekend. And then I'll try to do a live on Monday just to kind of go over some of the things that we were looking at, traditional markets, especially see where Bitcoin's at on the weekly. And of course, within the range, have a little bit of a longer discussion with you guys outside of those Bitcoin in 60 seconds videos. Also, if you are not seeing those videos, the live videos don't show up regularly in the feed until after a set amount of time. Then they start hitting the algo, so they might not show up. But if you go to my main page on mobile, it goes to the home page. On mobile, you have to click to shorts in order to see the shorts. And the lives as well are going to be under live unless you go to the playlist for long form videos and long form content. So I will be back on Monday, and I do appreciate you guys hanging out with me, and I hope you have a wonderful weekend. Please don't degen the hell out of your accounts and get wrecked. If you degen them, make sure you take profits quickly and keep that money safe. And I will talk to you guys later today in the Bitcoin in 60 seconds videos. For those of you that don't follow me on Twitter, go ahead and follow me at CryptoLandy on Twitter. And I believe that's what it is, right? Let me just make sure. Yes, it's at CryptoLandy. Same. I don't really have a lot of followers on there. It has picked up a little bit lately, but I don't have a lot of followers on there. So you can always DM me there. If I don't respond, hit me up in a public tweet. You can at me so that I know who you are. And then you can hit me in the DMs. Lately, they've made changes to Twitter's DM system, so it's knocking a lot of DMs out. You can always join the communities. You can search the communities tab for Landy's Crypto Corner, and you'll see that I also keep that fairly well updated. There's also a little bit of a members list in there for people that you should follow. There's not many. We're small. But as we grow, you can grow with us. So thank you guys. Have a wonderful morning, afternoon, and evening, no matter where you are in the world. Please trade safe. And of course, as always, stay safe. With all of that being said, Landy out.